the studio with me, joining Chris Gilmore from ABSA Investments, is Tony Bell, CIO of Vunani Fund Managers. Tony, we're going to talk about your investment strategy and also 5 global picks.
Right.
Yeah, global picks. Volatile markets at the moment. You still like the global companies that have got the big balance sheets and pay dividends and ply their trade in all sorts of different geographies. Easy business, yours.
Easy business. You know, Lindsay, if you take it back to 2009, people were extremely anxious. The macro environment was very poor. The macro environment's improved a lot, and people, I think, up until we had the correction in July, started to feel very comfortable that the stock market was going up. And as Chris will attest, you know, that's the time one as an investment professional starts to worry a little bit that the market is going to change momentum. So what we're looking for at the moment is we're looking for companies that can continue to maintain pricing power. For me, that's the holy grail. If you look at the big companies, the Googles, the Apple is an interesting point, but the big conglomerates like Procter & Gamble, Johnson & Johnson, the Starbucks, their earning streams are very diversified, and in a world where we are looking at lowish growth and a slow normalization of interest rates with tremendous pressure on growth in the Eurozone and China, that's where you want to stay. The market will pay up for earnings. The market will punish disappointing earnings.
Yeah, the one thing that worries me somewhat about this is the fact that there is such diversification of performances from different geographies. China's doing one thing. We've been used to 7.5%, 8.5% growth. We've been used to the second biggest trading bloc in the world, the Eurozone, chugging along a bit, but it's not anymore.
No.
We've been used to the US doing nothing, but now suddenly doing something. So how do you say to yourself, well, this company does this? Is it a geographical and a population analysis that you do?
It's a little bit, but it's also the policy game. If you have a look at where I think Dr. Bernanke laid the seeds of recovery, or the foundation for the recovery, and you go back to his November 2002 paper, he's pretty much done exactly what he said he was going to do. And I think between Dr. Bernanke and followed on by Dr. Yellen, they have put the US back on the map. The US has won the policy initiative. I think the ECB is struggling to come to terms with some powerful deflationary forces, and at the risk of being slightly contentious, China's sort of the trade of the last decade. So if you think of America as the world's new emerging market, it puts a little bit of a different spin on it, and you start to see the flexibility in the labor market, the strength of the balance sheets, the cash flows, and the market that is still the world's biggest consumer market with over 350 million people.
They consume, they don't produce. Chris, bringing you on this one, do you agree with what Tony said here?
Yeah, just to endorse what Tony was saying, I looked at this demographic analysis a few months ago, and by 2030 or 2035, I think it is, India will be the biggest population in the world, followed by China. Nigeria comes at number 3 with 440 million. Yes. But 400 million people in the US. The US has not only got a growing population, it's got a growing working population. And even as recently as the past few years, you've seen a number of industries moving back from China to the US because you've got a skilled workforce, and they're working for a fraction of what they were working for a few years ago because they're desperate for jobs. Yeah. So, I mean, to write off the US, you do so at your peril.
So you're a Buffetteer. Are you a Buffetteer as well? Because Warren Buffett doesn't even know where Africa is. He just invests in the US.
Well, let's go back to the founding father. I'm very much a Graham tier. Benjamin Graham, I think, set the scene. Look for earnings power. And if you can find earnings power at a reasonable price, I think Chris was commenting earlier, the S&P is only on a PE of 15, and I use only sort of advisedly in the current macro environment. But that's not a particularly demanding rating. So if you back out the growth rate that companies have to generate in real terms to sustain that sort of PE, it's not particularly excessive. And I think the mistake or the oversight on the part of some investors is that they have assumed that the growth rates for companies who are registered or listed in China, Hong Kong, India would in fact continue as they did while we were in the miracle years. And from all the analysis I've seen, we could see a very big step down in Chinese growth rate to 6%. It's quite possible. It's what happened to 6%.
Japan. How terrible. Look at ours. It's 1.5% for 2014. We've got 1 minute and 27 seconds left. I now need your 5 global stock picks without too much analysis. Please, just tell us. We can form our own opinion.
Yeah, so I'm quite positive on Nike, sports good company.
Yeah.
I like Google quite a lot. I think they're a new face of retail distribution, possibly one of the future product providers in the asset management business. I like stable companies like Johnson & Johnson, Procter & Gamble. And then I'd pick a select few pharmaceutical companies, particularly with those with a bit of generic exposure, including our own Aspen on a 32p. I think it's got some legs left in it.
So you like the S&P at 15p, you like Aspen at 32. Do you agree with what he just said?
Yep, we've got Aspen as a core holding in our portfolio. Excuse me, love it to pieces.
Yeah.
Okay, let's leave it there. Thanks very much, gentlemen. Brief as it was. Chris Gilmore is from ABSA Investments, and joining us in the studio for the last 5 or 6 minutes of the show was Tony Bell from Vunani Fund Managers.